What's up, everybody? Welcome back to the world's greatest show, aka the Gold Rush Weekly Watch List. This week we have a bunch of earnings, a bunch of names reporting this week, big names into earnings season. So this week, some of the companies reporting are Squarespace, UPS, GM, General Electric, Microsoft, Alphabet, Visa, Chipotle, Shopify, Boeing, Spotify, Meta, Ford, Qualcomm, Etsy, LRCX. We have Amazon, Apple, Roku, MasterCard, and then we have Exxon and Chevron and ABBV. So a lot of big names, a lot of the names that we're used to playing here, a lot of the names that have paid us and have taken money from us. So this is going to be a very volatile week depending on what a lot of these companies do. So let's just get right into it. I have the SPY on my chart right now, and SPY has sometimes you got to zoom out. We did have a nice run to the upside starting on the 22nd of June, where we made higher lows and higher highs to kind of break out of that wedge to test the top here, to make a new high and get into this gap over here. So now we're trading in this gap. But I do, I wanted you all to zoom out a little bit and just see that even though we're above the 50-day, which is this red line here, we still have, and even though we're in this gap, we're still in a down channel, right? We're still on a bearish trend. Even though we were able to form all these higher lows and higher highs within this a couple weeks price, we still have a bunch of pivots that we got to take out in order to even think we're back to bullish, right? So I want you guys to clean your slate and clean your palette and zoom out and realize that there's still more downside in this. At least that's the way that I'm leaning for the week, right? So especially with what I've been seeing in the news in terms of earnings. So let's just get right into the setups. I don't want to take too much time. So the first one that I have is Disney. So Disney broke out of that same kind of wedge that SPY was in. And though I will say that Disney's probably within the same downtrend, right? You can see 1 point here, a lower one here, right? A lower high. And now this can qualify as the next lower high, right? So I do like it for both sides. I do have a bearish and a bullish setup for this. It really depends on what it does with this, if it comes back to interact with this 50-day SMA or not, right? So to the upside, I got a break of 104.26, which is this line that has been struggling for the past 2 days, 3 days to break through. Above that, we got 107.06, and then we have a 108, which is a key number, right? Just an easy number. Easy number to sell at, right? Or easy number to buy, depending on what direction you're coming from. So a nice psychological number at 108. And then we have 110. To the downside setup, I have a very risky. I'll put this one in dashed because I think it's a bit risky. And the reason why is because you can take a short play from the break of this line down into the 50, right? Down into the 50 with a stop at high of day. Or stop, you can even take the stop here, but your risk reward it's not good at all. It's not good. It's 0.52. You want higher than 1 personally. I look for higher than 1. So that's why I don't really love it here. Now, if we were to wait until it breaks to 50, which will be right around here, and then you set your stop at this previous low of day, right? So you change your setup a little bit. Now you have a much better risk reward, right? You let it do whatever it does here. It might chop around a bit. But once it takes out the 50 with some gumption, right, with some gusto, it might come down and undo all of the buying of this day, right? So that's what I'm looking for Disney. I like the short setup on Disney right now more than the long setup, although we do have to be patient for that 50 SMA break, right? So that's what we got. So the next one that I have on my list is Square, SQ. What up, BT? So SQ has similar wedge, right? Same kind of wedge pattern, and we broke out of it last week. And you'll see a lot of the tickers on my chart, on my watch list for this week have this similar setup where they all break out and they found a bunch of resistance here where they tested it and they kind of fell down, right? So SQ did the same thing. It kind of broke out of that wedge and found resistance at a previous support level and chopped around a bit, still made its way above the 50 on that day, held above the 50, but closed underneath it on Friday. So SQ is another one that I think has a better short setup currently than you know, than a long setup. Let me see. Okay. So the setup for me is on SQ, and I wouldn't take it until perhaps the break of the top of the wedge here, this blue line. So these two blue lines, or these three blue lines rather, are lines that I've had for weeks now. So I just kept them intact. But I think that the better setup is to the downside. And Digital Ram, what up? Good morning. So I think the better setup is to the downside. I would take it at the break of this level here, right? The break of the close, and I would set my stop at the open of day, right? I wouldn't go as far as the wicks on this. And then this is obviously I would let a couple of weeks play out on this, maybe even, you know, maybe an August 5th expiration on this, just to give yourself some time and let the price shake out the way that you want it to. But the risk reward on this is 2.56 to 1. So for every dollar that you're putting at risk, you get $2.56 back, right? In terms of options, obviously the percent gain is going to be much different, but you know, this is a decent risk reward to the downside as long as you take the break of this 71.80, and then you let it kind of, you have to give it enough time. That's the only thing with this. This is going to be another patience play, right? Just like Disney, it's going to be another patience play where if it does break down, if it tries to test the 50 and then break, you know, it really depends on how it's going to interact with the 50-day, which is right here, right? Which is right here at 72.66. So I like the short setup to it better. Keep the stops tight, because you know this thing, when square moves, it rips faces, right? So keep it tight. Let's look at the long setup real quick. The long setup I wouldn't take until break of this blue line here, right? And I would do the same exact thing. I would just set it at the close of day, or if you want, you can even set it to where the 50 is going to be, which is like right around here. That'll give you even better risk reward, and then you can measure it from there to into the previous support level right here, right? This previous support level, which I'm sure there'll be a little bit of a pullback at this level. This gives you a 2.35 to 1 risk reward. And if you have patience and you put some time on the play, right? So if you take this and you extend it to the right because you have patience, you bought some calls that are maybe a little bit further out in August, you can get up to a 3.5 risk reward on SQ. So SQ is a decent setup. It's not the absolute best, but it's good on both sides, and it's right at the 50, and that 50 is going to be a good catalyst for a move to the upside or downside. SQ also has earnings on August, was that 4th? They have earnings on August 4th. So so just be mindful of that. That's what you don't want to hold into earnings. Or if you are going to hold into earnings, then make sure you have enough time on the contract so that your IV doesn't rush for SQ. So I like SQ a lot. Next one I have is Twitter. I'm gonna blow through these real quick, guys, but if you guys have anything that you want to look at, go ahead and throw it in the trade floor. So next one I have is Twitter. Yeah, okay. Twitter, same exact thing, right? It had like this kind of lower highs and lower lows kind of, and then it broke out of it, right? So we have a little breakout here, not such a drastic breakout as the other one, as SQ or as Disney, right? Look at SQ and SQ. And you know, with a little bit more dramatic breakout, and Disney with a more dramatic breakout, right? Disney with a way more dramatic breakout, SQ with quite a dramatic breakout, Twitter not as dramatic based on where I drew my lines, right? But what up, quick? So it's not as dramatic, but it's still doing about pretty much the same thing. Now, they reported negative earnings. I think they had negative numbers all around, right? They had negative EPS, earnings per share, and negative revenue, and they blamed it on Elon. But what I love about this chart is even with the way that earnings reported and with the whole fiasco, it still managed to put in a green day on Friday, right? It opened way down here, and buyers still took it up from this level, right? Opened at 38.90 and it closed at 39.84. So buyers wanted it even though it had negative reports. So that's really good. I got you on Amazon right now. So I like that a lot. Another thing is it's above the 50. I expect for it to come down and retest this 50 at some point. So I don't know if we're gonna have to play immediately, right? It really depends. I mean, this is a big bullish day for Twitter, based on all that buying action, and also the rest of the market. The rest of the market went down on that day, right? SPY went down on that day. QQQ went down on that day. And here comes Twitter putting in a green day, right? So I think that's It's very bullish. Now, so let me just do the same thing. I have my long setup and my short setup. This one is, I think this is a long setup. Let's see. Yeah, this is a long setup. So my long setup, I would put it at this red line, which is 38.82 will be my stop, and then my ultimate target will be the 200 moving average, which is this black line right here. I don't like to play around 200s. I like to let the price confirm what it's going to do after it's interacted with the 200. So I give it a day to choose, right? But with this setup, you got a 2.47 to 1 risk reward ratio. So this is a decent setup. Basically, what you guys want to do is see more green than red, right? You want to see more green than red. Once you enter and it kind of goes and breaks through some of these first targets, right? $40, $40, $50, $41, etc. You want to bring this up. You want to bring this up, and you want to decrease your risk tolerance is what you're doing when you do that, right? Now you're at 14.33 to 1, right? So what you do is you enter the play here with, here's your original risk reward setup. You enter the play with, let's say, 5 contracts, and then as it breaks out, it hits its first target, you sell 1. Hits the second target, you sell another 1. Then you bring this all the way up. Bring it all the way up, and and that's it. And as you bring it up, you decrease your position size, and that's how you manage your risk. All right, so that's what I have for Twitter. Let me look at the downside, because there's a downside play here also, and then we'll look at Amazon. So for the downside, only thing about the downside is, and I'm going to do the same thing I did with, I think it was Disney, where I'm going to go ahead and put this in a dashed line, because I think this is a little bit risky here. The reason why I think that's a potentially risky setup is because we have the 50-day that acts as major support at times, right? So let's just start with this one, and then we'll do a more realistic one. I think I don't want fibs. Why am I drawing fibs? Do this, and let's do a short position. This is a fantastic tool, guys, for when you guys are wondering whether the risk reward for the play is good. You can do it here in TradingView. So my entry would be, the risky entry would be the break of this candlestick's low, which is 38.82, right? Break of 38.82 is what you're looking for. Set your stop to the high of that day. So low of that day and high of that day determine where we are, right? Now, if you want, you can have some more patience and play the bigger bar, right? These are all inside bars to this one big bar here. So if you have patience and you would rather have a little bit more confirmation, a little bit more safety, then just play the range of this bar here. Don't touch it until it breaks out of this bar. That's why I call this a risky entry, guys, right? So that's that. Let's see. And then if we get to the final target, which would be an area where we found support in the past, right? We have like a pivot machine gun, take out all these shorts right here, all these stop losses, right? All these long setup stop losses. That's basically what they are. Take them out and hit this first bottom of this red candle here, right on the way down. You got 2.16 to 1 risk reward. So it's not terrible. Obviously, as you enter, you bring this down and you increase your setup's success, right? And obviously you want to give it some time, so you want to do one of these, right? Give it a little bit more time. I like it better to the upside, but I want to see what it does potentially with this 50, and I want to see it break this range, right? The bottom of this candle, 38.50, the top of this candle, 40.50. So $2 range has to break, in my opinion, before you can be confirmed for safety. Let me go ahead and put this in a dashed line. Let's look at Amazon. So Amazon had an inverse head and shoulders here that didn't shake out, right? Because we made a higher, we came back to test that level, and then we broke through the level here on this day. So this head and shoulder setup is invalid at this time. There might be another one forming depending on what happens tomorrow. Let me get rid of some of these levels. I just like to keep a cleaner chart. You guys haven't seen my SPX chart. We need to keep clean charts, guys. I do have, based on the head and shoulder setup, I did have a ultimate price target of about $80, but it didn't play out the way that I wanted it to. If you weren't on our study hall last week, was it last week or 2 weeks ago? Then the reason why I'd like the 80 price target for Amazon is because of this very clean head and shoulders, super clean. I'm going to take some time to draw it here. Let's see. Where's the head and shoulders? Okay, actually, we'll just do a path tool. Path, right? So we have nice big move to the downside. Clean shoulder at that line right there, right? Boom. neckline, back here to form a higher high, right? And then came back and tested that trend line again, right? Now, what I was looking for is a break here. We'll put us here, right? And the reason why I like that setup, I mean, it was super clean. It reminded me of Baba. If we looked at Baba back here, it has the same exact setup. It came from up here, bounced on support, made a shoulder, bounced on support, made a head, bounced on support, clean shoulder, and then broke down crazy, right? Broke down from the top of the head at 138 all the way to the bottom of where it finally bounced was at about $70, $73. So that's what I'm looking at for Amazon. I don't think it's gonna happen based on, the invalidation of this head and shoulder setup, which is here. This green candle invalidated it. What up, DYT? Good morning. So this green candle invalidated the head and shoulders. I'm gonna leave it there so I know what it is. It might eventually come back and test that level. The reason why I say that is because there's a high here, a lower high here, and right now at this moment we have a lower high still, right? So we're still in a kind of a downtrend, as is the rest of the market, right? We still have this kind of setup here, right? Let me put this, make this look different so it's not as confusing to my eyes. And so we have that. We broke out of the wedge, right? You see the blue, the dotted line, but we're still in the down channel. Now we have an opportunity to break out above that channel, right? We have an opportunity to break out above this channel, depending on what the rest of the market wants to do. However, we're up above the 50, so that's a good sign. There's a little bit of a gap right here, right? You see from here, let me just draw the box. Nice little gap here. I go from the low of this body to the high of this body, and I have my gap. We have a nice little gap here above the 50, a little bit extended from the 50, right? Like if we look at the other tickers that we looked at earlier, SQ, Disney, they're very close to their 50-day, right? Twitter, very close to the 50-day. Amazon made a move so strong that it's extended from the 50-day. Now, one thing I do like about Amazon is it consolidated a bunch in this area. And so when it's ready to make its move, it's gonna make a nice big move, big move coming, right? So this could be the start of the move, maybe not. Now, if you want levels for Amazon, then we have let's see. My only concern is, all right, so here's a risky entry, right? Hive-day risky entry. And then the safer entry, the safest entry, I think, would be the break of this top of this head is the safest entry, 128.99. So we could just call it 129. 130 is going to be a resistance just because it's a psychological number. People are going to sell at that number, especially if they bought it down here. People who bought down here at this level at hundreds are going to sell it at 130 because obviously they cashed out. So we want the high of days, your risky entry. We have 129 as a little bit better entry break of this structure here. And then we have 130 is, if you want absolute safety, you can just wait for it to hit 130. From where we are now to 130, it's about $8. So, if you want to enter right away, go ahead and just put time on it, right? Give it a couple of weeks. Into this gap is where it's going to get really interesting. I think, and they report on the 28th, so report in 3 and 4 days. So keep that in mind. I think Amazon, Amazon is one of those companies that you buy and you keep buying. And it's a company that's forever innovating, especially now with this healthcare venture they're going into. I think they're going to do really, really great with it. And they have a strong business model. I don't think that people really like Bezos and whoever's in charge now. I don't think they really love them because of their tactics, but their business is very, very strong. I mean, you push out your competitors by copying their products and just producing them at a much cheaper price. Like that's a shark, if anybody, right? So I like it. I think it's good. I don't know what they did during this time. I know that between last earnings and this earnings, I don't know how they performed, but I do know that there was Amazon boxes in my mail room every day. Every day there's Amazon boxes consistently since I moved in last year, right? And that's never gonna change unless they shut down. Unless something happens, that's not gonna change, right? People go when you go shopping in the real world, you check Amazon for a comparable price real quick before you buy something out in the real world, right? So Amazon is forever. Right now, it's been struggling. Let's go into the weekly real quick. Good consolidation. I mean, I think there's like a diamond pattern, which DYT pointed out to us last week, that it signals a reversal at the end of whatever trend that it's in. So it's came down, it's forming kind of a diamond kind of vibe. So it might be ready to break out, right? This could be the breakout right here. This could be the breakout of the diamond right here. This green candle from last week. We'll see. I mean, I just don't want to, and we're still having an inside bar on the monthly. I don't want to give anybody any hope with this. I like it better to the upside. Sorry, I like it better to the upside once we break this 129, right? We are extended from the 50. Let me give you a downside setup. Let me get rid of some of these lines. I'll give you a downside setup. If you guys have any other ones that you want to look at, throw them in the trade floor. Get rid of some of these lines. That bottom one can stay. So I like the upside safest at 129. Just want to reiterate that once more. So now we have a downside setup. Break of the low of day, which is the low of the past 2 days. It's also this kind of fib level right here. So it's a pretty decent level that we need to break. And when I say break, I mean like it needs to like break and hold on multiple time frames. You want to see it break on a 5, 10, 15 minute, 30 minute, and then you want to see like a new candle open underneath it on the like 15 minute, 10 minute, and then you want to see a new candle open underneath it and continue to move on like a 30 minute, right? So it does require patience. You don't want to just jump in, because what happens is you get like a peekaboo. You get like something like this where it breaks out, right? Like it opened up here. It made a nice big green candle and then sold all the way off. So it's kind of hard to mitigate. You got to see the momentum going in the direction. So you really have to hawk it and just be patient. The next level will be like right here. And then I would call the next one like the 50. I mean, it'll be like the 50 will probably meet it, right around here, right? So, and then let's just do a quick assessment of our short play. I like the short play, I think, better than the long play. Stop at high of day. Oh, BT calls the diamond patterns out a lot. BT calls out a lot of fire, actually. BT calls out a lot of fire. So just like her name says, watch BT, because she be calling out that fire. All right, so I have a what is this? A 179 to 1 risk reward ratio to the downside, just based on these few little targets. Let's do the upside real quick. Upside is going to be a little bit bigger depending on your risk, depending on where your risk is at. Long position, break of high of day, risky entry. Take the risky entry into the gap and put your stop at low of day. Nice easy setup. 3.13. That's a really, really great risk reward. Obviously the risk is very high on this level. I like it better to enter at 129, and I would set my stop at the high of day there, and that's a 2.59. So it's decent, right? It's not the best, it's not the worst, it's decent. I like anything that's better than higher than 1, right? 1.5 is probably like the minimum that you want. If it's like a 1 or less than like a 1.5, then just wait until you have a better setup. Don't take it. And if it leaves you, that's fine too. You don't want to force yourself into some of these trades. But Amazon has decent risk reward to the upside. Let me draw the downside again so you guys can decide which one you want. Decent to the downside too, right? Take your entry there, stop at the high of day, right? And then I mean, you can set ultimate targets of this level here if it gets back to it, which will increase your risk reward greatly. But I think it's currently right here for now, where that 50 is. The risk reward is better to the upside if you wait. The risk reward to the downside seems a little bit more obvious to me. So all right, so cool. So I see BT posted a bunch, so I'm gonna go into Boeing. Boeing was one that I was interested in, and Tesla as well. So Boeing did kind of the same thing that the rest of the market did. If you can see the wedge, there's kind of a wedge here, and there. So Boeing broke out of the wedge. Pretty much doing the same thing as the rest of the market. Put in a red day, same thing on Friday. So I'm going to get rid of that. I want to get rid of some. So now if you were on the call when we had, I think it was last week or 2 weeks ago, we had a setup for Boeing, and it took the upside, and now it's going upside. So we can get rid of some of these levels real quick just to clean it up, clean up distractions. I think Boeing has more. Boeing just got an order from who was it? Love? Southwest? I forget which one of the airlines, but somebody just put in an order for 200 planes, right? So that's a great news for Boeing. I think they might have received the news on this day, one of these 2 days. And so that's great news for them. I think that, and then what you see is it just kind of broke through all the levels, broke through previous resistance here, came back, and a little bit of buyers stepped in. Let's look at the 15-minute. Yeah, I mean, it came down to that previous resistance level and bounced, and then came down, and buyers are still here. Now, we are forming kind of an H, but it hasn't broken yet, so we can't officially call it an H. It really depends on what the market wants to do tomorrow, right? Which way the market is going to take us tomorrow. Now, one thing I do notice is that we were getting ready to fill this gap. I'm going to let this ambulance pass. So we were getting ready to fill this gap from the gap down in April. And so, I mean, it rejected. There was a bunch of gaps here. You know, there could be a bunch of sell orders here. This could be a potential supply zone where there's orders just sitting here waiting for the stock price to enter it so they can be filled. And it's not like, oh, I'm gonna sell once it gets into the gap. It's like I have this many shares and I wanted to sell it when it started gapping down back here, but I didn't get filled enough. And those shares are just those orders is just sitting there waiting from since back here. So now I think that might be what's happening here. Big move to the downside. Let me just look at this 15-minute again. Yeah, I mean, every time it kind of enters this shaded area, it sells off a little bit. You know, so little sellers here, and maybe that's as many orders as were there. Maybe the next kind of supply, you know, here you see a bunch of selling. So I think it looks like a potential supply zone. You know, obviously we won't know until we look at the level 2 and we look at things like that and look at the price action out of that zone. So I would watch out for that. Boeing, you know, that's another thing. I don't like, since they have earnings in 3 days, I don't know if like you can play maybe tomorrow, maybe play this gap fill to the upside. Let's see. Let me go to the weekly real quick. So obviously clean reversal on the weekly, double bottom, which I got rid of, and clean reversal into this gap. If we can hold this line at 157.97 or 157.94, whatever that line is, and work our way into the gap and take out the little bit of supply, I'm sure there's some supply there, then I think that Boeing potentially can go back to that 173. I just want to look at, I'm checking my TOS right now. I want to look at their implied move for the week. Let's see. For those of you that don't know, an implied move is basically a change in volatility between this week's contracts and the following week's contracts. So that's basically saying that the volatility is higher for this week, and the reason why is because of earnings. Right? Earnings is an unknown phenomenon, so the volatility, the excitement is higher, right? The tension is higher. So Boeing has a measured move of $7.50, right? So $7.50 as of now, right, would put us at 150 on the downside. So back to this line here, and 157, 164 over here somewhere into the gap, right? Into the gap, above high of day and into the gap. Now the $7 is subject to change depending, you know, in the next 3 days. It'll be whatever the absolute number will be on the day of, I don't know if they report in the morning or night. Let me check real quick. Earnings this week, Boeing is the morning of Wednesday. So Tuesday night is gonna be like Tuesday right before market close, 3:55. is when that number will kind of settle out and be whatever the final number is. But right now it's 7. So that either puts us into the gap, right in the middle of the gap, or puts us down to this line here. Now, that's the minimum that they expect it to move. This can go 20 points. It really depends. Like, look at Snap. I don't know what Snap's implied move was, but I don't know what their implied move was, but they were way up here at $16, and they fell and they opened up at around $11. So I mean, it's not so dramatic, but it's $5 of an implied move on a $15 stock. That's a 30% move. That's a big move, right? 33% move. So as long as it holds this green line here, which was a previous resistance, then I can see it continuing to the upside. And now at this point, we're going to just ignore the fact that it has earnings. And draw a fib on this. The beginning of the move, which started right above the 50. Let's see. So beginning of the move starting at the 50. Now we have some upside targets. Some of these line up with previous levels. We need to hold this area here. We need to hold this area here between the 1 and the 786 fib, right? So between 163 and 157 needs to hold in order for it to continue to sustain an upside move. If for whatever reason it doesn't hold this level and it falls, there's a nice pivot machine gun to the downside. So let me get rid of some of these levels here. Get rid of them, redraw them later. I like this one, but you know what it is. Right. So the downside setup to this, you know, failure of this to fill this gap, and then we have a nice pivot machine gun, which means we have all these low. So every day it made a higher high, right? Higher high, every single day, every day. And now we have a potential to take out all those lows, you know, with 2, 3, 4 different candles to bring out to rip down into that price action. I really love the short setup to this, just based on the fact that, especially with earnings, I don't know what investors want, and if they don't get if they don't get more than what they want, then they're gonna sell it. Boeing is one of those companies. The short setup gives you a 4-to-1 risk reward ratio if we do take out all of these pivot points. And then if we want the long setup, and let's say it does hold, I wouldn't take it until it breaks out of that between those 2 fibs. So I wouldn't take it until it gets here. And I would set my stop at the 786 fib, which is here. And I would set my target to the 1618 fib, which is where the 200 will be, right, in a few days. 200 will be right there. So the risk reward, you have a 4 to the downside and you have a 2.86 to the upside. They're both good. You know, they're both really good. Let me set some upside targets. So you have the $7, which will bring us to 164, and then you have this 167, which is the top of the gap. And then you have, I'll look at Tesla next, because Tesla's on my list too. And I want to look at MRNA too. Then you have this level and that level. So those are your levels to the upside. The 164, which is a measured move, which I don't think really comes into play until Tuesday. 167, which is top of gap. 173, which is previous resistance. If you look over to the left, we have 2 times they're touched, right? We have right here where it touched and right here where it touched. So I think we'll touch it again, and maybe reject again. Then we have 174.93. We could just call that 175. And then we have, we can ignore these for now. And then we have the 180. So, which will be where the 200-day moving average is. Black line will kind of meet us. So decent setup both sides. But let earnings tell you which way it's gonna go. Let's look at Tesla. So Tessie broke out of the wedge, clean breakout. Good earnings, good numbers, right? Good numbers, and he's good at pumping the stock. So it looks like there's potentially more, potentially better report next quarter. I think people are gonna want to buy it. If we look at, I was looking at this a lot, right? I was looking at this a lot. Just good notes. These are the notes from this week's call on how to keep your charts clean, right? some rules if you want to take a screenshot or whatever, or you could just revisit that video. It's in the study hall. But so Tesla likes this level, right? And we played around at this level a bunch in the past. I labeled it weekly support with 10x touch. So on this weekly time frame, you can see there's 10 candles that formed right on it, including this one here. I'm not sure if I counted this one, but we do have a good support there. And then prices currently, you know, it was making higher highs, higher lows on these weeks, and now we broke out of that kind of wedge on the weekly. I took the weekly to draw this broadening for maybe it was on a daily. Let's see. Yeah, I drew my broadening formation on the daily because I had small candles here, and then you see kind of the price was getting more volatile. It didn't really respect it as best as I wanted. I think this is probably a more accurate one now. We still haven't tested the upside. So, and this is quite dramatic. That where we are now is like 1,400, and down here would be like what, $64. I don't think we're gonna see all that. So, grain of salt with that one. But I'll look for another broadening formation. I know there's another one here somewhere. But on a daily, we're above all this previous resistance, above the 50. 200's right here. That 200 is a magnet. This resistance level here at 884.49 is going to be a very, very tough level. Very tough level. You know, on the weekly we have a 10x touch, so same thing, right? Same thing as the support. You just touched a bunch. You can see where it just stopped, fell hard from that level, came back. It took earnings to gap an earnings report here on this day to gap it through that level. It came back down to test it, and it bounced because I guess a bunch of people were still sitting here waiting to buy from this gap up. So demand zone moved, came back down, cut through demand, chopped around, you know. So now you can see that how crucial this level is. It's a very key level. So I think that if we can break out above yesterday's high of day and then break into this kind of box that's here, right? That's the bottom of the box. This box that's here. Then we can, so those are your levels. You have 842, 865, 884, and then 200 day are your levels to the upside. Now, the first two levels, 842, 865, obviously with 850 as a psychological level, right? Those three levels are going to be very, very difficult for Tesla to overcome. Sorry, those are going to be a little easier for Tesla to overcome, in my opinion. The hard ones are going to be the weekly resistance and the 200. Those are going to be the ones that are going to give us some trouble to the upside. Let me just draw a line at 850. All right, 850. So those are your upside levels. I like it to the upside, especially based on its breakout and earnings, what's called earnings drift, which means if the stock price goes up on earnings, it'll continue to go up until it doesn't anymore. Set your stop underneath the high of day or low of day. Play to the 200. Give yourself plenty of time for this to shake out, though it can shake out with Tesla in 1 day or 2 days, depending on how strong people feel about earnings. 2.26 to 1. Now to the downside, you can take the break of the low of day, undo this whole candlestick. Give me a second, guys. So sorry about that. So break of low of day, undo that candlestick, come down, test the top of this this wedge here somewhere, right there. So, and I won't go further than that. I mean, I won't go further than that. Tesla, you gotta play day by day. You can't really do too much of a crazy analysis on it. It's hard to catch a move. This is a company that I think everybody watches every single day. At least somebody has an eye on Tesla, right? So, like, this is a move that we kind of expected, but do we always get it? No, right? This breakout, falling wedge breakout. Do we always get it? No. We might get it here into the 200, maybe. Not sure. Let me put some of these in a different color so that nobody's confused for this week's levels. So Tesla, I mean, we play day by day. Play whatever it gives you for that day. If it does show very, very strong bullishness, coming into this week, I would say then take it to the upside. You could play probably the 850s, probably the 900s, 950s, but be fast with it or put time on it. Based on what I saw with SPY, we're still in that down channel and we're rejecting the top of the channel. So I think that we're gonna see. That's why I'm looking at all these short setups, because I think we're gonna come back down, even if it's down to the 50 or even if it's down to the top of this wedge. I think we have more downside. So that's why I think the short setup is better for pretty much everything, right? So take the break of low of day here, play it to the bottom of that candle, play it to the top of the wedge to start, right? To start. Obviously, there's a little bit of gap here to fill. And then we can play that down to the 50-day, which will be like, by the time we get there, it'll be like around this gray line there. So those are your levels, the ones in black, up and down. Risk reward to the downside for this is the break of this level, play it to the 50-day, say your stop at the high of day. Obviously, you can move your stop down and make it more attractive, but 2.76 to the downside, 2.26 to the upside based on what I have here, right? So, and it's in a nice zone where you can take either play, right? Very nice. So that's Tesla. And then Tesla, I think I like the downside better because price has been here a bunch. It knows that it can be in here. It feels safe here, right? Based on all this price action, it feels safe here. And then we have the support way down here, right? So if you play this into the support, if you're super short and you play this into the support, then your risk reward on this is 6.3, right? I'm gonna leave it here, but if you have support way down here versus resistance just one candlestick away basically, right? So keep that in mind with Tesla. Let's look at Save. It might have been Save who put that order in for oh no, it's definitely not Save. It's definitely not Save. Save is they're potentially gonna get bought out by either JetBlue or Southwest. I think those are the two competitors. Although I think that JetBlue and Southwest might have the same mother company, so I will keep that in mind. Maybe some more research is warranted there. But I see a downtrend resistance line coming into play here. What up, Jagus? So we have that. I never know if I'm saying your name right. So we have this right here, right? Now what I do see, and if you flatten it out a little bit, it's a little bit better, is a triple tap with a consolidation. So this is like JCat. This has JCat's name on it all day, right? It has the one touch here. And this has become one of my favorite patterns too. Become one of my favorite patterns, especially on SPX intradays. Let me go ahead and put that. We got one touch there, one touch here. Take this magnet off. One touch there, and another touch, and consolidation is what you want, right? We have the touch, and we have the touch with the consolidation right underneath the line. All this price just right at the line. A little extra rejection there, a little extra rejection there, right? And then some buyers still stepping in. The 50s underneath the 20, sorry, the 200. And I think that's probably why it's on BT's list, because that 50 looks like it wants to cut through that 200-day, forming a golden cross. Golden cross is when the 50-day crosses through the 200-day to the upside, signaling a bunch of buyers. There's some algos in the market that are programmed to buy once that happens. So that's very nice. So we have a setup, and we have two parts of a setup right here, which is very nice. There's also kind of an inverse head and shoulders here in the intraday. Like if I look at the 30-minute, I bet you I can see it pretty clearly. Right, we have, yeah, here it is. We have a shoulder here. We have the head here, and we have a shoulder here. So a low, a lower low, higher low, right? Higher, lower, higher. The neckline on this intraday setup looks like it's a little bit tighter. It looks kind of like that. That would be your neckline. You can play it from the break of 24.20 up to 25.20, about $1 move. I haven't had great luck with some of these smaller priced tickers lately. These would be my bread and butter, but for some reason I haven't had a lot of luck with them. But this is a very, very clean setup on the intraday as well as the daily. I would Although you can play both directions because you can just play this back down to the 200. You can play this back down to the 50. You can play it back down to some of these pivot points over here, right? If you want this, take it at high of day, risky entry, obviously, you know, and then break the trend line, risky entry. 24.71 is probably a safer entry, right? The safest entry probably would be 24.83. So, you know, let it do what it does here for one day and then jump in the next day. I think that's a 2-day move if it's green. So we have 28.60, 25.11. We have 25.45, top of the box. And you got a double inside bar on the weekly, which means that, let me just show this real quick. Double inside bar on the weekly, so that means that range is getting very, very tight. This has a range of between 25 and 23. Next one has a range of between 25 and 23, but it's a little tighter. And then this one, a little even tighter, right? So what that looks like is like the highs, like the lows, you got a nice little wedge. Nice and simple. Get rid of this. And then I want to see, let's see. Draw a fib on that move. As long as it holds, I mean, it can break down, but as long as it holds the 786, which is where the 50 is on the weekly, 50 weekly, then we have a nice move into this 200 weekly. So maybe this is something that if you like it, you can buy some time on it. I think when they get bought out, also, I think that when they get bought out, the EMA on the daily or on the weekly. Mine's the SMA. Let me throw an EMA on it real quick. I think that when they finally get bought out, I'm not sure when it's going to happen, but when that occurs, I think that the stock price, the weekly, okay, I think that the stock price continues to, it's still intact. Like they're not going to just buy everything and call it a day. They'll do a merger and acquisition, and then you can still own shares, and then at some point they're going to decide once everything's done what they'll do with the shares. So if they do get bought out, yep, it's right on the 50-day weekly EMA, this red line right here, sitting on top of it for 3 weeks straight. So this is very nice. This is very strong support. This shows that it's, you know, between that support, all the buyers that stepped in on these bottom of these 3 weeks, right, and then the 50 SMA as well. So you have the EMA and the SMA, and then you have, so earnings is the only thing, right? That's the only thing. One thing I'll say with airlines is that if you've been traveling lately, you see that the prices have been super elevated, unless you're going to Europe for some reason, right? From North America to Europe, for some reason it's been really cheap. But everywhere else it's been very expensive, and Spirit still remains the more inexpensive alternative. Though I hear that the experience, I mean, just from what it depends. Like if you're going more than 3 hours, then pay a little bit more, right? If you're going less than 3 hours, then maybe Spirit could be a good option. And Spirit is well below the price of their competitors. So, and I think the airline travel hasn't slowed down since it started back up last summer. And that means that maybe more people are, and with the inflation on top of travel, I think more people might be spending money on Spirit. So, but I don't know, I don't know. They have earnings on the 28th, the 27th. Let me see something. Watch this. Earnings. They have earnings on 27. 26, 27. I can't tell. It's not on this list. But I don't know if it's in the morning or at night. I don't know if it's in the morning or at night. So let's see. Nexter. Dave. I don't know. I don't know whether it's in the morning or the night. But you know, you have a couple days between now and then take a play. And if you like it to the upside, it gives you some upside play. Then take it. What is this? What color is this? This is a open 24, close 24. Okay, so this is a red candle. Okay, just keep it in mind. I mean, weekly on TradingView is showing tomorrow, but daily showing 27. Yeah, I think it's 27, but I don't know if it's on the I don't know if it's in daytime or nighttime. So just keep that in mind, guys. Just keep that in mind if you want to play this one. They have earnings on the 27th. It might be Wednesday morning. I'll find out and I'll post it when I find it. But it might be Wednesday morning, meaning playing Monday into Tuesday. Don't go for the full play. Play Monday into Tuesday, and then save. Let's just look at I have it in TOS. Save has a $1.6 market maker move, so it has to make at least $1.70 before both sides get clapped. Likely it will, which means it'll put us up back at the top of this wedge or really at the bottom of the wedge. So I like the setup on the weekly a lot. Has the double inside bar with the 50 EMA, just like BT said, and then we have that triple tap with consolidation right at the line. So I think we have some upside. 27 is probably the ultimate target for this. So I won't even really put a downside play on this. If you want, you can play the fibs to the downside. What I did was I drew my fib levels from the bottom of this week here, the bottom here at 1592-ish to the top here at 2509. So you can do the same thing on your chart, and then the levels that are in between that look like a ladder, just play those to the downside. Upside, you got your levels there. So for save. Let's look at Moderna, and then because I know Moderna has been going a little nutty. Moderna has a beautiful bull flag on a daily. Let me look at the weekly real quick. Weekly has a double inside bar on the 200 weekly with the 50 approaching up top. So very clean setup. What you see here is pretty much that and that, right? That and that. What that looks like on a daily is a wedge, nice wedge, kind of breaking down a little bit. I don't know where these numbers came from. Maybe this came from Tuesday's call. These levels here look like they came in from Tuesday's call. Oh, it's Tuesday. Friday, Thursday, Wednesday, Tuesday. Yeah. These are from Tuesday's study hall. Some of these levels. So break of this day high, of this day, Thursday's high. Take it to 180. Top of this wedge here, 180, or top of the bull flag. From there, take it up to 188. From there, take it up to 198. With a potential speed bump with a 200 here, right? The 200-day black line here. Yeah, these levels are pretty much intact. Break of let's look at this 15-minute. Now, you could have, and Moderna was a nice downside play. Only thing is, obviously, came up rejected. I think it looks like there might be supply up here. So what I mean by that is there's a potential area where sellers are sitting, waiting to gobble up your orders, gobble up the shares, and sell them immediately. So every time it comes up to this level, it looks like it wants to sell. Keep that in mind. Just based on this wick. Look at this nasty wick and then big downside move. So it had the previous range here, right? The low of previous day here. I don't know where does this come from? Is that my level? Is that my level of strat assistant? Yeah, that's the strat assistant level. So let me get rid of some of these. Strat assistant is a really good. My favorite thing about the strat assistant study on TradingView is it gives you like a clean up and down entries, right? These dashed lines here. So I wanted to look at the 15 because it broke on a daily. It broke through my red line here at 163.59. So I wanted to look at the 15 to see what happened exactly. So at 163.59, I mean, it came and stopped. It formed a doji, and then it put in a green candle, but then it became a red candle again. Right? Let me see. Open at 163, close at 163. Yeah, closed lower than it opened. And then once it found that number, it put in a nice big red move. So you could have bought puts, but the thing is, it was short-lived. right? It came and undid the move. It made the move and then it undid the move. And now that previous support is acting as resistance. So we might get, you know, I mean, obviously it came up and back down here in the after hours. So it really depends on where we are in the open. But this 163.59 level looks like it's magnetic for Moderna. So I would just watch what it does there. If it does happen to hold these levels here, right, this red line and this dashed red line here, and work its way into here, back into 50% of this price action, so like back where this doji was, like where this here is, let me just go ahead and draw a line on it so it's a little bit easier. If it can just make it back into this territory from where it's at, right, make it back here, I'll change that to blue, then I think that it's bullish. If it can make it back and not make it above, then it's probably going to work its way down. It needs to get above 50% of the previous day, above these dojis here, right above these bodies, up here. Let me make this a little bit bigger. Right. So big bullish move, pull back, and then it just needs to work its way into some of this previous price action. Now let me just draw a fib on this. You know, you always want to keep in mind, where are we? You know, we're in a down channel, but we're in a bull flag, right? With a bunch of, like, the strongest strain of COVID that ever existed, or whatever the hell they're saying now. Oh yeah, the fib is already there. It's there. Same fib as last time. It's, you know, impulse move high, holding the 618 fib. So it needs to hold that fib. That's where it's gonna hold. If it doesn't hold the fib, play it down to the 50%. If it doesn't hold there, play it down to 382. Above this 50% of this move. So if I just take the high and the low of this candlestick and I draw a line in between, it's that blue line. Above that, now we can start working our way up. And it'll probably cut through, once it gets above this, it'll probably cut through this area pretty quickly. As long as it looks like there's some sellers present here as well. Copy. It looks like there's some sellers obviously there where the wicks are. So just keep that in mind when you're trading this, that there's a bunch of sellers potentially in there. What that means is if you have two contracts and you get here, maybe right before it touches that zone, sell one and hold the other one for risk if you like it, right? They also have earnings on August 3rd, which is in 2 weeks, or middle of next week, not this week but next week. Keep that in mind. I think that they have the catalyst in terms of what's going on with monkeypox, and apparently there's polio now and COVID, right? So a bunch of diseases. I think that they have a good catalyst to continue the upside move. So I'm gonna go back into my list real quick. Let's see. We did these. Let's do Apple. Apple had the same wedges the market broke out. Apple has earnings on the 28th, which is Wednesday, I believe, and coincidentally, it'll be right around that 200-day moving average with earnings. So I'm really bearish. I'm a shareholder, and I love this company. I have like 7 Apple products in my field division right now, and I'm sitting at my desk. Like, there's so many Apple products here, right? And so I love this company. I think it's gonna do great long term. If it gets shot down, I'm just gonna buy more shares. But big bullish move, you know, formed. Let's go to the weekly. Found support and moved its way up. Right off that support. Let's go to the monthly real quick. And remind me, I gotta go back to Tesla. On the monthly, we have a 2-2, which is, I don't want to get distracted by this. 2-2 is on this is a bullish move, a 2 down, right? Broke this range, came down, and now broke top range, came up. So that's a nice reversal on the monthly. So that means that there's a potential for more upside. Obviously, we broke out of the wedge and we formed 1, 2, 3, 4, 5 higher highs and higher lows on a weekly. With, looks like, I was gonna say higher open, but this one messed me up. But anyway, it's good. Up, down, still forming highs up here out of the wedge. On a daily, we have 200-day sitting right there. So it really depends on what's gonna happen with that 200-day. I drew my setup to the upside and downside. I like the downside way better on this. Let me draw my long position. Long position entry would be the break of Thursday high. Thursday high is our entry. The risk reward on this is really, really low, in my opinion, right? Target, whatever, what is that? whatever price that is, with the stop right there. Let me zoom in on this because I want to get precise with this. Right. My target, and the 200 looks like it's curling up, which is pretty cool. And the target would be target at 158.82, stop at 153, whatever that is. So so it's a 1.45. It's less than the 1.5 that I like. I don't like anything less than 1.5. Now obviously you can be a little bit tighter with it and put it at the close, which will bring you to a 2.06, which is a little bit better. So if Apple does gap or does move between now and, I think we have 1, 2, 3 days before it reports, so we can get a 3-day move into the 200, and then from there we can get a nice flush down, right? That'll be very nice actually. So I'll go ahead and, maybe it doesn't play out that way, maybe it does, who knows, but I'll go ahead and put it like that, right? And then the downside play, which I like much better from where we currently are, but it'll be way better from where we will be, hopefully, if that plays out the way that I wanted to. Puts us at, put your stop at the high of Thursday, and your target would be the 50-ish, which would be like right there. It gives you 4.54 to 1. 4.54 to 1. Big green versus little red, right? Bring that to the close of, or the open of this day, it brings it to 5, right? And then if you bring your stop, you bring it down once you're in the play, 14, and you bring it to entry for 75. You can, I mean, it's just, it gets nuts after that. But I like it to potentially test up here. Now again, I'm guilty of this. I know that many people are. I see this, and then I see with earnings, I see this, right? There. That looks terrible. Let me do that. So I just want to mention that this is what I see with the price action, but referring back to the SPY chart, we're still in this channel and we're at the top of it. We're still in this channel and we're at the top of it. So if SPX says, all right, it's time to go down based on this channel, then there's no reason for Apple to come and test this 200. No reason whatsoever. It can immediately fail and fall down. So I like the down setup in both instances, whether SPY decides to break out of the channel or whether it doesn't. I like the downside much better for this. I'm gonna go ahead and take off the upside risk reward and just leave my short position, because I think that we shouldn't be distracted right now. I want them to go up long term, but I like the downside for now. So that's Apple. I wanted to go touch on Tesla real quick once more, because I failed to mention the monthly head and shoulders on Tesla. Monthly potential head and shoulders, right? We have this shoulder here, we have this head up here, and then we have a potential shoulder if we can't take out the resistance. The resistance will tell us whether there's another shoulder or not. So, and if we do have another shoulder, we're going to come back down to this weekly support level on Tesla. So Tesla has like some of the cleanest price action, right? So the next one on my list is Lulu. Lulu is currently, Lululemon is currently in a broadening formation. I think I found it on the weekly. Yeah, I found it here on the weekly, where it kind of price indecision and then big move up, big move down, big move up, continuation up. So this is a 2-1-2, big move, and then is this a 2? It's a 2 down, but it's still a 2. It's a 2-1-2 on the weekly, right? This is very bullish. A bunch of sellers stepped in at the top of this range, where previous sellers were over here, and here and here. So I'm expecting for it to potentially break down through this, reject at this level here, and then work its way down back to the 50 at least. So this is another good short setup. I like to give both sides. I'll set my risk really low. really tight risk. Keep it to like where this yesterday's high was, Thursday's high was, and then bring this down to the 50. So I like this risk reward. I like downside setups for this week because of that channel on SPY. That's the reason why I'm like looking at all these downside setups. You know, if Apple and Facebook and GM and the energy companies and whoever, all these other big companies that are reporting, if they decide to give great news and investors decide to buy the shares and bring the stock up, then that's a different market. But right now, based on the technicals on SPY, I think we have more downside. And there's some news about Apple like slowing down their order. There's just a bunch that's telling me it's going to continue to go down. But 2.85 to 1 risk reward ratio on the downside, if you want, and that's the setup is a rejection of the broadening formation. I mean, obviously it did break out of the wedge that I drew here, but it has that broadening formation. If you like the upside, I have my levels there, and these will be posted in the Watchlist channel a little bit later. Entry, because I gotta clean my apartment today. Entry, and then there's your. I would set my stop at the pretty much the same level, right? And your target would be you have. I mean, I would just keep it conservative and keep it to like where. And we can go up to where that gap is, up of that gap there. With that play, you want to give yourself more time. And that gives us a 6.41 risk reward. Top of this is probably where the 200 is going to be too. So I like it better to the downside, but there is upside. I'm not going to lie. So that's Lulu. Next one is Shopify. I have no play on Shopify yet. It's still in the box. Still within this box. When this thing breaks out, whether up or down, is going to go insane. I think I had a head and shoulders on this too, which is why I gave it a target of $20.83. But I think the head and shoulders, it was like shoulder, head, shoulder, and now that's invalid. Let's go to the weekly real quick. Some nice consolidation. Let's go to the monthly. Monthly is a 2-bar. So actually, let me see. Low is 29.72, low is 29.76. Oh, monthly is a 3-bar to the upside. Let's see that. Oh yeah, 3-bar. Big bar. It was a bullish engulfing at one point, but it needs to really, price needs to come back up. Hold on. Sorry about the noise, guys. So yeah, so nice 3-bar on the daily. Weekly kind of breaking out of this falling wedge. Nice 3-bar on the monthly. Weekly kind of falling out of the breaking out of the falling wedge. And then on the daily, we broke out of the falling wedge, but we're still within the zone. So I want to see it out of the zone. Break above 40.15, which is the high of Thursday. Then we have 42.24. 45 will be in the mix as well, because 45 is a nice easy number. 45. And then we have 49.04 to the upside. And then downside is just downside is nice and neat. Get rid of this. Downside is break of Friday, break of this day in black. Right, break of Friday, break of whatever day that was, which is just a nice pivot point. And then break of Wednesday low, break of Monday low or Tuesday low, and then back to the bottom of the channel we go, right? So upside, downside. I think the downside risk reward is better at this point, just based on looking at it. Because I would set my stop at there. Oh, this is upside. All right, let's do upside. We already have the upside thing. Let's do upside. Entry. Stop. They like that range. Strat Assistant likes the range of Thursday's candlestick a lot. Like it set that as a range. So I'm gonna go ahead and use that as a range. If we go there, we have a nice 2.92 to 1. We go downside, and I have just a few more, and then I'll let you guys go. We go downside. We have, and I'll set my stop at the high of Friday's, the open of Friday's candlestick. there. Semi target to the bottom of the channel, bottom of the box, 2.38, 2.92. It's very similar. I like the downside setup much better, personally. Right. So that's that. Let's see. The next one that I have is LI. LI's in this gap. It's in this gap right now. China, if you don't know what's going on with China, there's a potential for what happened to our housing market in 2007, 2008 to occur in China right now. Their default rating is very high. Their trust in the default is very low, meaning the potential for default is very high. Evergrande, I think, was one of the ones that started it, and they try to put a band-aid on a broken leg over there, and it's all coming to fruition now, all coming to light. So China's real estate market will greatly impact the real estate market here in the United States, because a lot of the larger buildings, especially in New York, a lot of the larger buildings are owned by Chinese billionaires as well as Russian billionaires. So if they default on that side, then the likelihood that they sell some of their holdings here, and that the price of their earnings drop here. The price of the holdings drop here. The likelihood will be very high. So, and all that to say, LI, Chinese stock, if their real estate market goes down, so does their stock market. And LI will be affected by that. It's an ADR. So it'll come down. I'm looking at entry, and I'm sure this might even be at a gap down here somewhere at some point between now and tomorrow, but I'm looking at the entry at 33.50, come down, test of the 50-day will be right here when we get there at 32.18, and then from there 30.84, and then from there the top of this box 30.11. I like the downside better than the upside, but I drew upside because I do see the falling wedge there, right? So downside, keep the stop at that, wherever we closed for that day. And then you can say your final target at 200. I'll keep mine conservative with this box here. It gives me a 4 risk to reward ratio. To go upside, break of high of day is a little bit riskier than the break of the previous day, but break of high of day, set your stop to the previous day's low. So that's a nice tight risk reward, and that gives us, from the breakout of the wedge to the top of the wedge, gives us 5.42 risk reward. Very, very good risk reward. I just don't see it going up based on the catalyst, based on the news. First, we at least, like, the 50 is magnetic, and then from there, boom, what are we gonna do? Up, down, back to the 200. From there, down into maybe this gap here. So I like the downside right now for LI. I don't know. I gotta do some digging. LI, NIO, Tesla, they all report end of month sales. All car companies do. So the monthly sales is something that's tricky, because at the end of the month they can put out a report that is very bullish or very bearish. So just keep that in mind. We have between now and 1 week until the end of month, one trading week, essentially this whole trading week, to see what it does. So that's the setup. Good setup for the downside for me personally. Next one that I have is NIO. I just wanted to mention that NIO has the same kind of cup and handle that I called out. Let me just change the color of this. I saw it a while back. But what I don't like about it is, and I haven't even looked at my momentum indicators, guys. That's insane. What I don't like about it is, this handle's way too long at this point. It's way too long, and it's just like slowly grinding us down, right? So, and now it looks like this. If we give up the 50-day and we give up this 1847, then we can kind of work our way down. This is one of the ones I didn't get to really chart, but give up that 50-day right there, boom, 1847, boom, and then we have some more downside. I like this at this point. It didn't break out. I like it to the downside. If we do get upside for whatever reason, but there's too many pivots. I mean, I'm not in love with it, but there, and there, right? And then top of the structure. I like it much better to the downside. I probably won't play it because it's a cheap stock at this point. It's like damn near penny stock, so I probably won't play it. That was an exaggeration, by the way. But I likely won't play it unless I see like some big volume come in, good catalyst, good end of month numbers, I probably won't play this till August, to be honest with you. But I do like where it's at between a 50 and a 200. Underneath this 50 in my dump. If we do get the dump, I'm gonna set an alert for it. I'm gonna set an alert right here. Right here, which will just cut the gap between the 50-day and the resistance, and that's it. That's it. And I'm taking it off my screen. Next one, I have a Starbucks. Starbucks is at the top of this broadening formation that we found on a weekly. Right, I have this broadening formation that's forming on the weekly. Let's go back to the weekly real quick. This is a previous support level, so it bounced off of it twice, right? Let me just draw my line. Support here, and then we bounced off it a bunch, actually, a lot of times. Came down underneath it, gapped up above, came down, tested it, came back, bounced, came back, bounced. So that's a good, nice level. So I like this to downside. The reason why I like it to downside is because we are at the top of the broadening formation. There is a potential cup or cup and then handle breakout there, but I think that I want to see how this broadening formation plays out. You know, so if we come and do like another 2 or 3 green days, then we can work our way back down. I don't have any levels for it right now. They have earnings on the 3rd, which is next week. We'll see a better setup, I think, starting next week or towards the end of this week. They also have dividend payout, which does this to stocks, right? Dividend payouts usually sell. They usually sell on those days. So I would just keep it in mind. Just keep this on watch. I don't have a setup for it right now. Next one is Walmart. Walmart is one of the nicer setups. If you go to the monthly, there's a monthly broadening formation. Came and tested the bottom of it now. 2-1-2 reversal, right? Bullish reversal. So that means big candle down, inside bar, indecision, and then crack the top of the inside bar to go up. So I like that. On the monthly, on the weekly, we have a failed H, and then we held the 200 weekly, right? So failed H means it didn't break down to down here. It held it and it's working its way back up. The center of this broadening formation is like right around here, I want to say. Right around here, 139, so let's just call it 140. So 140 is a target. 140 is a target. Yeah, right there. That's my target. Short-term target, which will give us, 3-4 days, maybe next week at max to get to 140. This is the daily chart. Even with this gap down on earnings, right? This gap down, which we've all been aware of, it's been working its way up, forming higher highs and higher lows. Very clean. High, low, high, low, high, low. Right? So we're looking at. So I'm gonna this is like the series of companies that I'm just looking at. I have to really think about it more before I put some levels on this. But in the meantime, let's see if we can get above Friday. Now we're playing with the body of that big candle on the left. Is there something else over here? Yeah, I mean, these two candles and then like 135, because it's 135, right? Like it's just 135, so why not, right? 135 is a good number to sell. Walmart's at 135, let's sell 135, right? And then you have another kind of midpoint between these two. At like 138 and change. So I'm just essentially measuring the move between, boom, from there to there, from there to there, there to there. It's all pretty much the same move. Now it did cut through the 50-day. The 50-day is still sharply down to the downside. I bet you the 21 has cut through. Let's look at it. And then I think I have like 1 or 2 more and then we're done. I don't have a 21. Changes 50 back to 21. This red line is going to be a 21 now. Yeah, 21 just cut through the 50 right there. Get rid of it. right? And so I like it to the upside. Walmart. The reason why I like Walmart and Costco and Dollar General and Dollar Tree and Target. Oh, Target's another one we gotta look at. Is because they have all experienced during this earnings call. They all had earnings around the same time, and during that call, they all experienced an increase in supply. Some of the stuff they just bought, because there was like supply chain issues, as we all know, and then so what they did was they prepared and they bought more so that they wouldn't be susceptible to the supply chain issues. But then you have all this supply that you can't sell, so now you got to lower your prices, and that's very bullish for you to lower your prices, even though you're taking an L. They already took the L. Here's the L right here, right? This gap down is the L. Now all that supply is moving. It's moving because it's all very well priced, right? Competitively priced. So I think they're kind of inflation proof right now. Walmart, Target, Costco, BJ's, they're all stores that we go to that we can, regardless of how much things cost, you can get a good price there, good value there. So I think they're inflation proof at the moment, right? At the moment, between now and the next earnings, we'll know what happens when they get on this call on this day and tell us what happened in this quarter. So I like it to the upside. I'm not even going to put a downside setup on this. If you want the downside, you play it through this chop of these 3 days. These 3 days chop, right? So I'll draw the box for people who are not on the call, and then from there you play it down into the 50, right? So your downside is this. Play it through that chop into the 50. 50 will be your target. Upside, very clean. Play it to the 200. So I like Walmart a lot. Let's look at Target. Similar setup, same gap down, higher highs and higher lows. Broke out of that wedge above the 50. Target, break of high of day. And then we have this level here. Then we have the pivot here, which is pretty much, I'm just going to put it on this gap at this point. There, and then from there we have a whole gap. So I really like Target a lot. They have earnings in the end of August and dividend in the end of August. So we have time on this. One of these has to report earnings, I think, soon. Let's see. Costco has dividend soon. BJ's has earnings in the middle of August. Walmart had earnings. So yeah, so they don't have earnings. I'm looking for a catalyst for TGT. I don't see one. Maybe Starbucks. Maybe Starbucks, because they have a presence in Target stores. So maybe Starbucks is a potential catalyst for TGT. So just bear that in mind. But I don't know. I like it to the upside here, not so much to the downside. 160, see 162.86, then from there 168, then from there 170, 172, 174, etc., all the way. And it's not going to be a big upside move. It's going to be choppy, up, come back down, come back up. But it's near the gap, which is very nice. The next one I have on my list, I think, is we got like two more. Target, I didn't even flag Target this week. We did NIO, Starbucks, Walmart, Tesla, Etsy. Etsy has an inverse head and shoulders forming on a daily. Inverse head and shoulders forming on a daily. The one thing that's concerning, and you can see it here, just head, shoulder a little bit lower. Oh, sorry, shoulder, head a little bit lower, shoulder a little bit higher. Retracement. So that's like elbow, shoulder, head, shoulder, elbow. Neckline is broken on this day, 91.32 neckline done. And then they have earnings in 3 days, 2 days, 3 days. So, and Etsy has a market maker move of. Has anybody purchased anything on Etsy on here? Etsy's pretty good. They have some good products. Only thing I would say about Etsy, same thing I said last time. Etsy has a $13 expected move. Only thing I'll say about Etsy, same thing I said about Shopify actually, but it applies to Etsy, is that, let me see, Shop has earnings too. So Shop earnings and Etsy earnings, both this week, is that, Etsy, we're in inflation right now, right? We're in times where prices of things are increased and unaffordable. Everything, basic necessities such as milk and fruits and vegetables and gas and meat and potatoes and rice, right? The only thing that hasn't gone up is the Costco hot dog, right? So So in a time where we should, and the Fed is saying let's slow down the flow of money real quick so that the prices can come back down. Are people really gonna go on Etsy? You're not buying your fruits and vegetables on Etsy. You're not buying toilet paper on Etsy. You're not buying cleaning supplies on Etsy, right? You're going to Walmart, TGT, Costco, right? Dollar General, Dollar Store, Dollar Tree, whatever the hell all those things are called. You're not going to Etsy to go buy some fancy plant holders, right? You're not going to Etsy to buy decorative things, right? You're not spending money on. I mean, some people are. Some people are blessed enough to be able to go on. Like I bought something on Etsy last week that I needed. I waited a month to buy it, right? And I need it. I got it, and I'm gonna install it today. But some people like that's like the second thing I've ever bought on Etsy in my life, right? There's people that can buy on Etsy and that sell on Etsy, and Etsy's been a good crutch for people who lost their jobs during a pandemic, right? They open a business and they sell their shit on Etsy. But everything on Etsy is expensive. Everything on Shopify can potentially be expensive. And if I'm in an inflationary time where I'm looking to save money, am I going to go buy frivolously on Etsy, right? And Shopify. So I think that they're going to suffer. I think they're going to do bad on their earnings. I do like the inverse head and shoulders. I think that we're gonna come back down and test this 50-day at some point, very soon. So that's it. I don't really have clean levels for this, and I don't want to throw levels out because of earnings. We do have earnings in 3 days, so it came and rejected this box. There's a box here, and it's kind of rejecting it. So I kind of want to see what it does on Monday. We have a nice downside day potentially on Monday, so I would play downside on this. I wouldn't get too giddy with the upside. Yeah, I mean that's pretty much it. Do I have any more lines over here? No, that's pretty much it. I would play a downside. It's a shooter, right? Shooting star. Shooting stars fall down, right? So see what happens. I think we have downside. And let's see, is there any other requests? I'll take one or two more, and then I gotta cut it, guys. Is there any charts you guys want to look at? Just go ahead and post it on the trade floor. I'm just gonna cycle through, see what else I have here. X has earnings this week. I think I don't know what's gonna happen with them. They have an inverse head. They have a head and shoulders forming on the daily right now. Shoulder, head, shoulder, and we're right at the neckline right now. QQQ's in the same down channel as SPY. Yeah. If you guys have any other ones that like setups that you're looking at, go ahead and you can throw it in. If you have a chart you want to share with us, go ahead and throw it in the watch list channel. If you have anything that you want us to take a look at, go ahead and throw it in the watch list channel, and somebody will post a chart for it tonight. Nvidia has another broadening formation which played out nicely this week, and then pulled back on the red day, the market. I want to see what the rest of this week does. Nvidia will be a nice short setup too, based on SPX, based on SPY, based on that SPY downward channel. Let me get rid of this strat assistant. Based on the SPY downward channel that we're currently rejecting, right? If we open down here, we work our way down. If we don't hold that 50-day, then it's gonna work its way back down. It's gonna flush. So if it does flush, I'm looking for Nvidia to also flush out of this broadening formation, work its way back down to the bottom down here, 128. But we'll see. We'll see how truthful how that'll play out. Let me just draw my midline here. That's like the middle of the broadening formation. So above that we can stay bullish. Below that we can get bearish. If there's no more, what up, Carp? So if there's no more requests, nothing else you guys want to look at, then I'm gonna call it. Carp, you have anything you want to look at this week while you're here? Hold on. Say it again. I can't hear you for some reason. Hold on, it's probably me. Give me a second. Give me a second. I'll post the video. Yeah, I don't know. My headphone isn't working for some reason. Oh, hold on. Okay, what was that, Carp? Yeah, Starbucks has a nice chart. Starbucks has a very nice chart. Yeah, Starbucks has a very nice chart. It has that broadening formation, but it also has like higher lows on a daily, higher lows on a weekly. Weekly consolidation breakout, right? Monthly, higher lows on a monthly above previous resistance, working its way back into this territory where it was at in the past. Man, look at this short setup. Look at this short setup. Look at how beautiful this short setup would have been. We could have played it all. We could have still been playing it. Could have still been playing it. That's 37 to 1 risk reward ratio. Yeah. So Carp, if you have something, just type it. Cause for some reason my microphone's not working. My headphone's not working. If not, all good. Let me just scroll through and see if we find something else. So we did those. We did Disney. I like Disney to the upside, especially with earnings. SQ, I like to the upside. Twitter, I like to the upside a lot. Yeah, let's look at Baba. Apple, I like to the downside. Lulu, I like to the downside based on a broadening formation. Shopify needed to break out of this box before I could take a play on it. LI, I like to the downside, even though it does have a falling wedge, which is bullish. Falling wedges are like bull flags, kind of. A wedge, and then sellers can't take it down with conviction, so buyers step in and just explode it, right? So that's what that is. NIO, I don't see a setup on it yet, although if it does take it down to 50, then that'll be nice. Starbucks, broadening formation, I want to see it fail. I like Starbucks. Starbucks is another good company with a great business model, but what I mean is I want to see it fail the top of the broadening formation and get rid of this. Walmart and Starbucks might be subject to some of Target's earnings. Or sorry, Target might be subject to some of Starbucks earnings. That's what I meant to say. Right, because Target and Starbucks have like every Target I go to has a Starbucks inside of it. Let's see, Walmart. Look at Baba in just 2 seconds. Walmart, I like it for the upside based on the inflation analysis. Tesla, I like for the upside, at least into that resistance. That resistance will tell us where we're gonna go. And again, with Tesla, there's a potential monthly head and shoulders. Shoulder, head, potential shoulder if we fail that resistance. If we do the weekly broke out of the pennant. So nice move, good earnings, good move. There's a good risk reward both sides from where we are now. Downside's much better in my opinion because we have way more room till we get to the support versus the resistance, which is right here. But I still like it to the upside. Etsy, downside play. I like this pressure, sell pressure on this. I want it to fail back down to the 50. Target, we spoke about. Target's another good setup. Target is the same as Walmart. Same analysis. I think it goes up, even though inflation is, people talking about inflation. I think Target goes up. So these are my levels for Target right here: 160, 162, 164, 168. Maybe 164, 166, 168, right? So every couple dollars. Just do one there and do one there, that's fine. Right? Psychological numbers, right? And then 5 down channel. I'm just gonna work my way down to Baba. Pinterest working its way to the bottom of the broadening formation. Top of the wedge, bottom of the wedge for Pinterest. Cool. Top of the wedge, bottom of the wedge. Supports right here. Strong support. So if it doesn't hold that support, then it's bye-bye. But that's a good spot. I mean, it looks like it might just bounce there one more time. AAL, back in the wedge. Delta, I'm not sure what it's doing anyway. QQQ's in the same down channel. Domino's Pizza made a nice move out of our last analysis and fell. CLF, Love. If Love holds a 50, then we can continue upside. Everybody has earnings this week though, so I would just keep that in mind. The Macy, BBB, all right, whatever. I don't know where Baba is, so let's just go straight to Baba. Baba has an inside bar on the weekly, and it looks like it wants more downside. Baba looks like a potential shoulder, head, potential other shoulder here. It looks like we might be going down to test the neckline right there at 86.93, maybe. Baba is a good play for the Chinese real estate fiasco, right? So Baba's a great play. Baba's a good play for that. Just draw my neckline weekly. Neckline. Okay. Weekly head and shoulders neckline. On a daily, we got, oh, beautiful. On a daily, we got a gap down, consolidation, and big break underneath the 50 after it held a couple days. This is beautiful. BT. We have that break of low of day, break of that low of day will put us into this low of day, which will put us into this low of day, which will put us here, which will give us the neckline. Upside 104.70, box, highs. I'm gonna ignore that one. I'll go straight to that one. Whatever this is, I'm just gonna get rid of it. Right, and then we have the 200-day over here. I'll just leave this thick black line because that looks like it's accurate. So yeah, let me see. Okay. So yeah, I like this to the downside. This is a beautiful downside play, BT. Shout out to you for pointing this out. Baba's another one we should probably keep on our radar at all times because whichever direction that Baba runs, PDD will run, Baidu will run. You know, there's a couple more, but bear flag breakdown. Right, here's your flag. Here's your flag. Pull. Here's your flag. Whatever, and then there's your breakdown right there. Boom. I like the downside much better than the upside for this, especially with the catalyst. The catalyst, the news is going to tell you everything you need to know about this. I will even leave I'll give it room to come back to the top of this structure right here, this box, and I'll set my ultimate target to the neckline, and then from there we'll let it decide what it wants to do. But that's a 2.5 to 1. If you want to be even less risky, you want to remove some risk, put it at set the stop to the high of day. Gives you 3.63 to 1, and if you want to be much less risky, then you set it to where the 50-day is. You got 6.14 to 1, and then we're working our way back to that neckline. So Baba is going to be one that we're going to watch this week for the downside, especially if SPY does what technical analysts expect it to do with this channel, right? And then I just want to look at AMD real quick. Yeah. I'll give you guys an analysis on AMD later on. I gotta go clean my apartment. I have to go join my wife and clean my apartment before my kid gets back home from being at her grandmother. So that's it for this week's weekly watch list. Thank you guys for joining. If you guys have anything you want to add, go ahead and throw it in the watch list channel. This is how you keep your knife sharp. You set all your levels before the week starts, and by the time the week starts, you are breathing, waiting for your setups, waiting for your alerts. You already have the contracts lined up, etc., etc. So this is very important. Thank you guys for being part of this and for making yourselves better traders and for making yourselves better members of this community. If you are watching this on YouTube and you're not a member of a trading community, you're looking for a trading community, visit goldrushgang.net. We got a 7-day free trial at the moment, and as you can tell by the alarms in the background, it will not last very long. Big fire. All right, thanks guys. Enjoy your Sunday, and we'll see you guys tomorrow morning. Peace.